Hello, everybody, and welcome to Ticker Talk for Wednesday, December 13th. Let's get right into this. So everything we do here is for educational purposes only. We are not investment advisors and do not provide investment advice. And all trading and investing decisions are your own and done at your own risk. Go ahead, smash that like button if you want. We're going to take a really quick look at the markets, see what's going on, and then we'll get into your tickers. Hey, Marvin, welcome back. Good to see you here.
Good to see you.
So yeah, let's take a look and see what happened since the last time we looked at these. So obviously, it's been a bit of a crazy week in the market. We had CPI report yesterday. We had the FOMC today. So CPI came in light yesterday. We gapped up a ton. You can see that here in this big red candle. We gapped way up here and just pulled back all day long. Had a little bounce at the end of the day. This is not really the kind of price action we wanted to see. However, because we had the FOMC coming today, we'll excuse this. Yeah, it's not ideal, especially pulling back from this downtrend again. I mean, what was really cool is, okay, we came up, we had a nice rally. We came up into this downtrend line and also at this resistance here above the 200-day moving average. We pulled back from that. Okay, it shouldn't be a big surprise. I mean, everybody was, expecting a pullback. We found support at the 100-day moving average, and we moved up and away from that and tried to attack this downtrend again, which was great, really nice price action until it pulled back. And now, today we've got this totally indecisive candle here after the FOMC. It's a little messy. It's hard to read, and to be really honest, I think that this could really go either way. I want to kind of look at the intraday action a little bit here on this. We're looking at a 5-minute chart now of the SPY. And you can see on the rate announcement, we had a big red candle. Now, even though it was only 50 basis points, which is exactly what we were expecting, there's, an 80% probability it was going to be 50 basis points and a 20% probability it was going to be 75. Now, so why are we going down on this? Well, if you read the report that goes along with it, if you read their economic outlook statement, it was kind of negative. It wasn't all bright and cheery, and it wasn't all sunshine and rainbows. There's some stuff in there that wasn't great. So not a big surprise to see the market pull back a little bit on it. And then when Jay Powell started his press conference right here on this big red candle, I can't remember what he said to open it up. But it wasn't entirely bullish what he said. It wasn't super hawkish either. He just, I don't know. He just seems off lately. And he looks, I don't know, he looks a year older. I mean, like, every 6 weeks, he looks like he's aged another year. So I don't know if the job is being rough on him or what's going on. But anyway, we didn't get happy Jay Pow today at all. So we chopped around, which is totally normal, and then we seem to have found a level here in the after hours. So where does that leave us? Where do we go tomorrow? And that's a great question. It's getting really binary in here because we've got this downtrend line here. Let me draw on this the uptrend on this. So we've got a downtrend, we've got an uptrend, and it's all kind of forming this triangle, and we're right in the middle of it. This zone is becoming a real inflection zone here. And I think that when we break out of here, it's going to be a big move, whether that's to the downside or the upside. And I can make a case for each direction here. So I think we need to wait and see how the market plays this out. It's just we just don't have the information here on the chart. And one of the downsides of technical analysis is technical analysis will be broken by big macro events, and that's what we have now. So the market needs to digest this. The big money needs to decide which way they're going to go on this, and then that's the way we should go as well. The cues are going to look pretty much the same, I believe. Yeah, kind of, one up, pulled back into this, and now looking indecisive here. Right in the middle of this consolidation that we've been in for a month, just over a month now. IWM, the Russell 2000 small caps, holding an important support level here, and right at the 50-day moving average. But this is looking weak here. It's looking the weakest out of all of them, unfortunately. We want to see these small caps performing. That means the market is risk on, but that's not what we're seeing here on this chart. Let's look at the volatility index. So obviously we had that big spike up a couple of days ago. We had the big move down yesterday and move down again today. So this is looking bullish here, that we've moved back away from this big gap here, and taken back actually most of this little rally that VIX had. So VIX is saying we're probably going higher. How about bond yields? The 10-year yield. 10-year yield is kind of saying, hey, we got a shot at going higher. But notice it is consolidating, and it printed a really indecisive little candle today. So again, not a ton of information here at the moment, but I suspect this goes to the downside. Let's take a look at the dollar index. Dollar is hanging right at its support. Now the momentum on the downside to me seems to be slowing a little bit. We're right at support level. If we break down through here, then we've got this long-term trend line. I think this trend line goes back to COVID, was it? Yeah, or no, actually May 2001. Okay. But I would expect to see this trend line, once it comes down here, this to act as support. And it may ride along that for a little bit and then kind of figure out where it wants to go. Or maybe the support here holds. Ideally, in a perfect world, we'd be seeing the dollar come down, because if this dollar is coming down, then our equity markets are going up. Okay, let's go through, well, let's take a look at gold, because that can give us hints to the overall market, especially after a big macro event like we've seen. But unfortunately, we're not really getting any hints here. Again, looking a little indecisive here on gold. How about copper? We were looking at this on the weekend. And copper is also looking indecisive. It's not breaking down. It's not breaking out either. How about oil? What's oil doing? So oil has bounced off its lows, which is good to see. We're seeing some movement up in oil. I talked on the weekend how about oil really needed to do something, and it needed to do it right now, or it was going to have a serious breakdown. So it's good to see that it's bounced there. It's probably going to need to come up into this area and consolidate up in this area for a little bit. But yeah, I mean, this sort of it's breathing a little bit of life into our oil plays, or what's left of them. What else? I guess we should look at XLE, the energy ETF, and that's looking, starting looking a little bit messy, but it had a bounce. Be really nice if it held above this level here. Let's move into TAN. I think there was some movement in TAN. Yeah. Okay. So we had a bear flag in TAN, and we broke out the upside of that. There's going to be some resistance when we get up here in 84.5. But yeah, the solars are definitely looking a little better here. How about what's First Solar doing? Okay, yeah, that's turned back up after it started to roll over. Will it actually get through and close above this resistance line and then go attack these highs? End phase. Pretty much at all-time highs here. Looks ready to go and attack this. I think this could break out this time and really go. Or at least get through here and hold. That looks ready. All right, let's look at consumer discretionary. Okay, so holding support barely. Look at it, poke down below it today. But it's still holding, closed above it. So that's important to see. This really needs to move away from this level. Industrials, we had seen a pullback in industrials, but they moved back up through their resistance, now acting as support, but not really going anywhere either, right? You see, kind of seeing a theme here. I mean, the whole market is just looking really indecisive, really looking like it could kind of go one way or the other. Financials. Looking a little messy, trying to hold, didn't hold. It's after getting through its resistance, couldn't hold it. Will the 200-day support this? I suspect it probably will. Technology. Okay, so we had a nice break, above this pivot. So, it is putting in, we've got a nice channel going on here in technology. It's putting in a series of higher highs and higher lows. This is good to see. Let's draw a line across the top of this channel now. Something like that. Yeah, as long as it's within this range and still moving up, I mean, we can be happy about this. Technology is looking healthier than it has in a long time. Of course, the last couple of days, not so great. But yeah, it'd be really nice to see this turn back up again from here. Communication sector. Still moving sideways. Good to see it broke out of this little range. That broke to the upside, not the downside. But again, kind of gave it all back, right? I don't want to go through any of the FANG stocks right now. Let's see. Semiconductors, what's going on in there? Still, tried to break out of this consolidation and then moved right back into it. Just kind of like everything else. Healthcare. Healthcare is still nicely in an uptrend. Had a couple of indecisive days, basically, like everything else. But still near the highs here. Could easily move higher from here. Biotech. Biotech was nice to see it, after it kind of broke out the bottom of this channel, took it right back. But we need to see, this continue to the upside, because notice how we have a bit of a lower high here. And if this rolls over from here, then we've got another lower high, and then we're sort of looking at a short-term downtrend. REITs. Yeah, kind of not doing much there. Staples, same sort of thing, going sideways a little bit. That's fine. It had a nice move up. It's fine if this takes a little bit of a break. And utilities. Still moving up nicely. I probably need to adjust this trend line, but somewhere like that. That looks a lot better now. Yeah, I mean, nice, nice strong uptrend in utilities, taking a break for a couple of days. None of the plays we've been watching really did anything. So that is it. That is my tour of the markets complete. I know we went through that really quick today, but we want to get to some tickers here. So, Marvin, what would you like to talk about?
Good question. Actually, I do have a couple questions or a couple tickers I was looking at. Like a while back, I was played around with Walgreens on their breakout, but it's starting to look like it's forming maybe a cup and handle. I just not quite sure. Is what it's starting to look like, possibly.
Oh yeah, totally.
And I'm pretty. Feel like that's a pretty bullish move, the way it's looking like it's forming. I just don't know. I imagine that the entry point to kind of hop back in would kind of be, I guess, in this area of it consolidating. I just don't, this is my first time kind of seeing a pattern form before my eyes. So, I'm like, yeah, this might be actually worth hopping back into. So, yeah.
So Yeah, we've been seeing this particular cup and handle in a lot of stocks.
Mm-hmm.
It's it's big like this. It's probably on pretty much the same time frame, and it's all over the place.
Right.
None of them, none of them have really broken out properly yet. And even this one, you can see it tried to go yesterday,
Yeah.
and it failed. It pulled right back in. So, um, two ways to play this, right? You can play the breakout from the handle.
Mm-hmm.
So, but yesterday, I mean, you wouldn't have played the breakout from the handle yesterday because it gapped right up into resistance. It gapped right up to basically what is the rim of the cup, right? Let me
Right.
just bring that line down. So that line right there
Mm-hmm.
is the rim of the cup. So you're not going to buy a gap up right into that, and then it pulled back all day yesterday,
Yeah.
and today it's pulled back a little more. So this is going to need a little more time to set up. And so my suggestion on this would be, don't play the breakout of the handle.
Okay.
Play the breakout of the rim.
Got you. Got you. That's helpful.
Definitely want to see a move above here. Now, I mean, what would be really cool is if it moved up. Oops.
Kind of built like a double base almost.
Yeah, build it. Yeah, build it. Yeah, because I mean, look at. I mean, there's kind of we kind of had this 4-day base here,
Right. Right.
and so yeah, if you kind of do a base on base sort of thing there, that would be awesome. And then the breakout from that should work.
Okay.
So, but it might not build a base. It might go up there again and try and get through. The problem is I wouldn't want to buy it if it goes all the way up there in one day.
Right. Right.
If it goes up there on day one, cool, and stops here, and then on day two, then it breaks out, fine. That would be fine. But what is actually how much of a move is this? 41 to, I guess it's only a buck. What's the ATR on this? Yeah, see the ATR on this is only 2%.
Yeah.
So that's yeah, the ATR is about a buck. So if it goes there from here, then it's already done an average, an ATR. That's the movement you would expect to see in a day. So that's
Right.
kind of iffy about buying it on until it holds up at that line for even just one day.
Got you. Okay, that's helpful.
But yeah, I mean, good eye on that. You spotted that. You spotted that nicely, and I mean, it looks like it should go. This is a nice looking chart here. I think it just needs more favorable market conditions.
Yeah. 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 For sure. For sure. And I just remember so like when I first like was looking at Walgreens, about towards the bottom of it forming that cup, after the earnings, I hopped in and wrote it up. And I was like, okay, take my profit and get out. And then I was like, wait a minute, I think it's forming a cup and a half. But I wasn't, I was like, okay, I just don't know how to play this because I was like, I've seen it on, charts, but in terms of like studying, but never seen it forming in like real time. So
Yeah.
yeah, that's helpful.
Well, that's awesome. I mean, it's I mean, it's cool. You got to see it form in real time.
Hmm.
I mean, even and yet, if you look at this, because what's we've got here is we've got sort of a nested cup and handle. Do you see it?
Kind of. Oh, right there. Okay, got you.
Got that one, and then the handle here. It kind of made a little base. I'm surprised I didn't draw that in before when we were looking at this little base right here. And it broke out nicely, you know what I mean? It broke out, it came back, it tested, and then it went again.
Right.
And now we've got this sort of bigger cup and handle in there.
Oh yeah, I didn't even see that at first. Yeah, because I think you marked it up the last time I made ask talked about But yeah, I didn't see that. It is nested right inside. Wow.
I'm going to clean some of this up though, and just clean this chart up a little bit. There we go. That's better. All right. Cool.
Yeah, I had that, and I was looking at. I've also started to look at LYFT, because it is starting or has crossed because of the MAs. It started to cross a bit, at least like on using the 5 and 10 over the 20.
Yeah.
I was like, okay, starting to form. So I mean to cross, and I know it definitely, LYFT can move. So
Yeah.
I'm just thinking about like maybe looking to kind of start a little entry to just ride it up, till it gets back into that like $14-15 range or so, and just kind of sit and swing some shares that way.
Okay. So I have a couple things to say about this.
Mm-hmm.
A few, actually. So it is still very much in a downtrend.
Yeah.
The downtrend is really clear. Okay?
Right.
I mean, it's even kind of made a half decent channel here.
Yep.
I'm gonna get a bit of a channel line on that. So that's something to be aware of. You mentioned the moving averages. Now, it does kind of look like, we're seeing more, whereas before we would kind of go up, immediately come down, go up, come down, go up, come down. Now it kind of like, after this last up, it went sideways, and it didn't come down as low. You notice that, we've got this channel, which is sort of a best fit on the whole thing, right? But if we connect these lows together here, you can see now we're making a bit of a wedge, right?
Right.
A downward sloping wedge we expect to see break out to the upside. Okay, so because momentum on the downside is slowing,
right?
There's no doubt about that. But the caution here is that when downside momentum starts to slow and the stock starts to go sideways, well, then all those moving averages start to slow and go sideways as well, right? So they will start to stack up on top of each other, or for them to actually really stack up on top of each other, the stock's got to start moving up.
Gotcha.
But price will start crossing these. But what can happen is that they'll all start wrapping. If this continues sideways, then all the moving averages will just start wrapping around each other. Price will be going back and forth across the moving averages, and then the moving averages are basically useless at that point. So there is that possibility here.
Gotcha.
I'm not saying that's going to happen, but it is a possibility and something you should be aware of while you're watching this.
Okay.
Now, so where does that put you now, right? It's like we've got some pretty clear lines here, and I think most people will draw these lines the same way.
Right.
But the 50-day moving average has acted as resistance yesterday, and the top of the Bollinger Band there as well.
Right.
Since yesterday, but it didn't pull back much. So it does kind of look like it's setting up like it wants to break out. But this is the kind of stock that I think is, this stock can have its own catalysts, but it's going to do best when the market is also going up.
Got you. Yeah, that's helpful.
If you can combine a move up in this, like if this had some sort of catalyst, the market was going up that day and it broke out of this wedge, that would be awesome. That would be a fantastic entry.
Gotcha.
You can, if you can find these lines on your intraday chart as well. Maybe if we make this say a 15-minute chart, we should be able to draw at least that top line on there.
Right.
What's that going to be? Does that come from? I think it comes from here, doesn't it?
I think so. Yeah.
Around there. Something. Yep. I mean, you would want to, if you're going to play this, you'd want to definitely tighten that up. You'd want to zoom in here, compare it with the one you drew on the daily, make sure it all looks nice. But, or just, flip your daily chart to an intraday.
Gotcha.
To catch, to really fine tune the entry on this.
Okay.
So if I turn this, move this to a 5-minute right now, that trend line should more or less be intact. Yeah. Okay.
Yeah.
So yeah, you can see where. So what I mean, if this happened tomorrow, what you'd want to see, for tomorrow, like if we gapped up a tiny little bit tomorrow or something like that, and then this started to move into here. Again, I wouldn't want to buy it because it's that's a fairly big move to get back to that trend line.
Right.
Yeah, that's 3.5% away. And
right.
our ATR on this.
So I got like what I have for ATR? I don't have it by percentage. I just have it by like dollar. I think on average, looking like it's moving roughly like what 75? Yeah, 80. Yeah, you got like ATR is 85, 75, 75,
yes,
85 cents.
I've got like a 20 and a 50 here, so like 71 in the short term and 6 longer term. So yeah, and percentage wise, that's like between 6 and 7%. So it's not bad. I mean, if it uses up 3.5%, getting to the trend line, that still leaves you, potential for 3.5 to 7% more after it breaks out.
Yeah.
Because on a breakout like this, it should probably go 2 or 3 ATRs in one.
Right.
Okay. So you just don't want to use too much energy, getting to that breakout point.
Gotcha.
And that seems like a lot. Now, intraday, if it went up here and then consolidated around here for even just 20 minutes and then broke out, I'd be all over that.
Okay.
Yeah, so when you're watching this, just really fine tune this trend line. Draw it like you think everybody else would.
Okay.
Which means zooming in a little bit, making sure you're nailing, some good spots. Like the way I drew this here, when I cut through this up here, it should probably be moved up a little bit so that I'm not cutting through that one. So something like that, right? But this over here, I think most technicians are going to cut through this.
Okay.
Really only a day and a half of action, and the trend line fits really well if you cut through that, right?
Yep. It does.
Fine tune on that. Yeah, that looks like a good spot there. So, let's go back to the daily. Oh, there's one other thing I wanted to show you here. Because this is kind of cool. This sort of like, this reinforces your bull thesis to a degree. Because there's been a little bit of a RSI divergence. See right here. See on this low, we had low in the RSI. Then we had a new low here, right?
We did.
RSI it's higher.
Oh yeah, it is. I didn't even notice that. I just was looking at my MAs and my MACD, and so like kind of paying attention to like feeling like it was starting to get ready to make that shift. But yeah, I did not even see the divergence though. Yeah, it did. It definitely did.
That's bullish there. Sometimes you can see these in the MACD as well. Okay, so yeah, this MACD isn't.
It's starting to. Yeah, no. I don't think it have.
The MACD line has turned up above.
Turned up, yeah, it has.
Ever so slightly, yeah. It's definitely there. It's definitely there. So this is, slightly bullish, but look how flat it is, right?
Right.
It's hard to the MACD isn't as useful when it's kind of really flat like that.
That's helpful.
Right, because it's, I mean, you know, a MACD works well. You know, it works in trending markets. It doesn't work very well in choppy markets or consolidations.
Got you. That's helpful.
So,
That's
yeah. So yeah, I mean, there might be something here. I just
watch it.
the market. Yeah, exactly. So we don't know what the market's going to do.
Okay.
You know, in the after hours, we're up a little bit. You know, it's
Oh, that's after hours it seems like there was a I'm trying to see. I was just trying to see if there was any news or anything. But no, I thought that was something from a couple days ago. So
hey, I see Justin made it.
yeah. So yeah, that was I did have one more, and then that was it. It was I'm also paying attention to DataDog.
Okay.
That's the other one I've been kind of keeping my eye on. That it seemingly broke out of its trend.
Yeah.
Mhm.
You know, it kind of looks fairly similar to LYFT, doesn't it?
It does. Maybe it was because it's the same scanner I use, but
It's got a more defined kind of double bottom going on here.
mm-hmm.
And you know, the RSI is looking fairly strong. Notice how like these lows, these closing lows are almost identical, but you know, we've got a fair bit of distance in the RSI here. So it's not a divergence, right? Because you know we have a higher low here, but I do like how this is quite a bit higher than here.
Yeah.
So that's kind of cool. So yeah, let's get some trend lines on here. So you know, I think going from about there and yeah, okay, so this one's got a little bit of a ways to go to its downtrend line as well.
Okay. I think I wound up drawing mine. That was helpful that I saw you do that because I think I drew mine a little higher up, and I guess from like the peak, and then I came down. I was like, oh, well, maybe it might be, but moving it right there is probably definitely a lie.
You could, you know, I mean, you could go there. Actually, you know what? I'm gonna change how I draw this. So yeah, I mean, there's obviously sometimes you just have to you know, use a little discretion. I don't like using the you know, the very peaky peak of a candle a lot of the time.
Yeah.
Especially when it's really wicky, right?
Right.
I'm not a fan of that. Now, some people would go way back over here,
right?
But then what do? You know, do you
Yeah.
there? Do you draw it here? Or do you go here? And then you're cutting through a whole bunch of price action. Sure, it worked right there.
Right.
It kind of works here and here, but it just doesn't seem to be a good fit for what's going on in the chart, right?
Right. Makes sense.
That's why I started over here, and I think this
That's
is
helpful.
You know, this is a better fit, and you could even because really. This is sort of our long-term downtrend, and then we've got an intermediate-term downtrend that's even a little bit steeper. And there's no reason why you can't draw another trend line in here, and it actually probably should.
And that's the one I have right there on my chart for sure. And that's why I was like, oh, it broke the not the longer one, but the intermediate one. It seemingly has broken it. And stay there at least these past couple of days.
Yeah, yeah, I think both are valid. I'm glad you drew this one. You know, and again, this one has, you know, there's a couple ways you could draw this, right? I kind of don't like it like this. You're cutting through too much price when you do that.
So got you.
I think going here kind of makes more sense.
Got you.
Okay, so that's our trend lines. What about, support and resistance? I guess maybe there's,
I got it right around that. Like I think it's like, yep.
You took something off of that one right there?
No, I got where you were placing it. I think that's about where I had a kind of like kind of had a trend line there. About where you had it. About where you have it there around the 86.
Okay. So yeah, and then of course, we've got the double bottom here, which we would watch for. On the way back up, this area here in around 112, is probably going to be an area where it's going to stall out for a little bit. 112, 113, somewhere up and around there. You want to watch out for it on the way back up. Plus, you've also got some declining moving averages, and you've got some, there's a fair bit of overhead here. And look at all the volume it's done in here, right? So yeah, this may have a bit of a tough time. Like I think the last one we looked at might go up a little easier than this one. I think that's got a lot of work to go up. But there's a fair bit of reward here too, though, right? Because I mean it's $30 until you even get to, well, it's, what do we got? We probably got about $10, $15 up into this volume node, and then another 15 up to what will probably be really strong resistance.
Right.
But yeah, there's definitely room to play with this.
Okay. No, that's helpful.
Cool.
Thank you.
Yeah, no problem. And welcome back. You kind of disappeared for a while, and
yeah, I know I did. And then I know, like I read an article about the Wall Street Journal. I think it was a couple days ago or the other day, and I was like, I need to post this in the chat and just quickly because I thought it was interesting. As at least I think it was an opinion piece about like the just kind of seeing, I guess, the kind of like the divergence between the yields.
Yeah.
And how a lot of investors are, they kind of, like just really, I guess, want to be kind of like, we need the Fed to be like hands off because it's seemingly, or like, maybe come in a better, I guess, not as hawkish or trying to figure it out because they feel like, or seemingly they're making the correlation in terms of that it's widening, like and so it's putting a lot of fear in terms of trying to see. But I thought it was an interesting article because as we even talk, have those have had conversations, and so just kind of seeing some other conversations like that in that space. But yeah, I kind of just been hammering away at work, so. It's the holidays, and so like working in a university setting, everything is like full hands on. So yeah, so I've been swamped, and also at the same time, I'm also looking at trying to find another job. So yeah, so I kind of been.
You got a busy life right now, kind of like I do.
Yeah, and then we here in Georgia we had that big Senate race. And so, kind of like a fun fact for me, I actually, so part of what I do is I also I am a associate minister, and so actually, like I got ordained at Ebenezer, so I kind of just have a relationship with now the senator elect. So, yeah, I was at the watch party. So it was interesting space. So yeah, just kind of like life, that kind of thing. But
awesome. Yeah, I mean, it sounds like you got a lot of interesting stuff going on. That's great.
Yeah. Sometimes a little too much.
All right, we should probably move along. But
yes,
it's nice to chat with you again. We should move along and see if Justin's got anything we want to look at. Justin, run back to your computer. I know he was busy
Hello.
There you go.
Here.
Cool.
All right, let's see. What am I holding right now? Okay. Oh, so I pretty much have been like de-risking. Like I had a couple good trades, swing trades, and I decided to just take profit on most of them.
Yep.
But one of the things I'm still holding is in mode.
Oh, okay, yeah.
Yeah, which I'm in. That one actually is not. I didn't go into it planning, or I wasn't planning to do like a swing trade with it. This was more of like probably gonna hold it for a little bit longer.
Yeah, yeah.
Yeah. So just wanted to see your thoughts on like where you thought it was at, and then other than that, I have a few shares in Celsius.
Okay.
Yeah, that's it. Other than that, I feel like this week's been so crazy. I've just kind of been laying low as far as.
Well, I think that's great.
Yeah.
I have too. I mean, partly because of the move and everything, right? I haven't been doing a ton.
Right.
I haven't really been wanting to, or knowing that coming into the end of the week, I'm not going to want to have any swing trades on.
Yeah.
If I'm in them, I want to be out of them by Friday morning because I'm probably going to shut it down early on Friday, and I got to rip this rig apart and get it all packed up and ready to move. So.
Nice.
And then the beginning of the week, I'm like, well, I don't really want to be getting in anything with CPI coming, with the FOMC. So, I'm kind of in the same boat as you. It's just sort of like a little bit of wait and see, doing some day trades and stuff. But anyway, so this one for me is an investment for me. However, I'm kind of like, I kind of hoped it would have moved away from this area a little bit quicker. But I think, just the shallowness of this uptrend is telling us that we just got to be patient here. We've got all the important moving averages below, and they're now it's starting to rise. The 200-day is going to be turning up soon. It should turn up within a week or two, I would think. And obviously the 100-day is rising. The 50-day you can't really see because I put a trend line right over top of it, but it's rising as well. One of the things I don't like is just sort of the way this is looking a little toppy right here. We've just sort of lost all upside momentum, right? So, is this going to play out as a triangle? And if it breaks to the downside, is it going to move really fast? I kind of like, I don't want to have to bail out of it if it does break to the downside, but I kind of think I probably should. So, I mean, that's just, my personal opinion and how I'm thinking about this. What do you think? I mean, what would you do if this broke out to the downside?
So what I've been doing, which, by the way, excuse if there's like some noise. I'm still actually technically finishing up work. I'm just washing my brushes. But I was going to say I've been sort of adding to it whenever it touches that trend line.
Yeah. Okay. Yeah.
But I'm also to the point where, like, if it were to break through that, I think, I have a pretty, like, not an amazing profit, but it is a profit. So part of me is just like, just I'd be happy to take the profit,
right?
If it falls too far below that trend line.
Yeah.
But I think if it fell too far down the trend line, it might eat up what little profit I have. So that's why I'm kind of like basically I'm at 5%, which is like not that much, right? But it's okay.
Not that much.
Yeah, but if it were to drop, like 2-3%, I don't know. Like, it's like, do I take the 5% profit now, which is like an okay, whatever profit, or like an okay amount, or do I like sit it out and risk losing that whole 5% and get nothing, and just break even?
Yeah.
So.
And that's the tough decision. And, like I said, kind of facing that same decision myself. And just because, you know, it's not totally behaving, you know, as well as it should. This little series of lower highs here really kind of concerns me.
Yeah.
You know, for me,
I have been listening to some people's like cases against the company.
right.
I know some people are saying like the biggest red flag for them is like it is what you would call, like, a lot of those purchases are a one-time purchase, because it's like they sell like those machines, but to tell you the truth, I don't know too much. I should probably do a little bit more due diligence on it.
Yeah, well, I mean, if you gain a client, you only sell something to them once, then that's not ideal.
Yeah.
Your cost of acquisition of that client, you know, is probably fairly high. If you only get one sale out of that, that's not great. But that being said, I mean, you know, I really like the look of their fundamentals.
I do too. But I was just on like YouTube and just listening to like a few of the arguments against it, I guess, is what I'm saying.
Yeah. No, I mean that seems like a totally reasonable concern. And again, you know, I mean, coming into a recession, you know, how much does that affect it?
Yeah.
So,
yeah. There you go.
You know, it might be the kind of thing where, you know, you kind of do have to exit it and just keep watching it, and you know, as long as the fundamentals stay good, then look for a place to get back in.
Yeah. I think just for me, it's just one of those things where I like really don't want to turn it into a losing trade or whatever.
Yeah. No, there's been too many of those this year, so let's not take any more of those.
Right.
Yeah. I mean, it's, you know, it's good to be cautious. We're in an environment now where we can make money if we're willing to take small profits. Profits will be smaller. We're not going to get the big profits that we did, or not for a while anyway. We're not going to be able to get the really big trades. And yeah, we probably should take some profit when it's given.
Yeah, I agree. And I did read something that you wrote in the Discord where you were saying like, there's always like a couple bad years in the span of like, I don't know, like 10-year period of trading. And you were saying that like, right now is a good time to kind of just like learn and focus on that, and just be ready for when the market starts to turn up again. Yeah,
for sure. Yeah, I mean, right now, I mean, look at it. I mean, a lot of people, we've lost a lot of people everywhere. I mean, people have, not just the Discord, but I mean, throughout the entire investing community. Because, I mean, the people have lost a lot of money. Some people have lost a lot of money. And they're just not into this anymore. But you guys are still here, and the trick to longevity in this is to have really good risk management, and recognize when the regime changes, and like it is now, and we're in a place where it's a little more, it's more difficult to make money, but there is still money to be made. We just have to change our expectations a little bit and have really good risk management. We want to stay in the game, right? So we shouldn't be taking the big risks that we were taking before when there were really big rewards, because the rewards now aren't going to be as big. And like you said, use this as a learning opportunity. And when you come out the other side of this, and we all will come out the other side of this, we want to have our capital intact, and we will be that much better prepared, for the next market regime. That will be better than what we're seeing now, because this is a really tough market. This is one of the toughest markets I've ever seen. So surviving this is a badge of honor. for you guys. And, you know, you guys are doing well through this. So, you know, pat yourself on the back, but, you know, keep that risk management tight.
Thank you. Yeah, no, I appreciate that badge of honor. That's I feel like things like that is just what kind of keeps me like. It's that kind of like mentality that's kind of like kept me around, because, like you said, we did lose a lot of people. You know, especially in the Discord. Oh my gosh, I think there was like what at one point almost 300 people in it.
Yeah.
Yeah, but
It's a shame. It's really unfortunate. You know, and most of those people, unfortunately, probably lost money. You know, and but I mean, that's just that's investing and trading, unfortunately.
Mm-hmm.
You've got to respect it. It's it can be a real beast, and yeah.
Cool, man. Well, thank you. I appreciate the convo.
Yeah, no problem.
Which, by the way, do you want to see this thing that I've been working on? I don't know. It's not really appropriate for the Discord, but
yeah. Why don't you wait until we're finished recording here?
Yeah. No, for sure. I mean, that's what I was going to say, but
you know, yeah, we'll. I think, unless you have any other tickers, I think we'll start packing it in here.
Sounds good. No, that's everything.
Okay, cool. So I didn't change this. All right, so where are we here? We are. Oh, this is like November. Whoops. Anyway, hang on. Enter sessions. Let me see if I can grab. Let me see if I can grab this. There we go. Okay, so we are, what is it, the 14th? Well, I thought it was the 13th today. I got my dates wrong. Anyway.
No, yeah, it's the 14th. I always thought 13th too. I've been thrown off at work all day.
All right, cool. I'm not the only one. All right, so anyway, I'm moving on Sunday, the 18th. So there will be no market briefing on Sunday, the 18th. I should be back up to speed by the 21st. But there's a little bit of a question mark on the 21st. But I hope to be here on the 21st. But definitely no recording or anything on the 18th, and probably no morning briefing on the 19th. So that's what's coming up there. And all right, well, thank you everybody for coming out. I am going to stop the recording now.